Okay, always be willing to cut your weakest position. Okay, when you cut it. You have what's called a down and out and an up and out. You establish that with every position, whether it's a stock or an auction. Down and out is, let me talk about that first because that's going to be more important, is cut your losses quick. You want to let a stock move a little bit in the way the stock moves. You got to let it move. You can't just let it go down a point and cut it. So you're going to look at the 6-month chart. Okay? So write down a 6-month chart. So if you're an Apple and you look at a 6-month chart and it's kind of just going like this, nicely. A little bit of ups and downs, but mostly it's going up. You got to allow for some movement. You'll see the movement. You look at the day high, the day low. Apple moves around 9 points a day. You don't have to check, I know, but it might move like, 12 points a week, 15 points a week. It might be in a trend. So you look at the chart, you're going to say, well, according to the chart, Apple might move down, 15 points. At which point there's buying. That's called support. Write that down. At the same time, it can move up 15, 20 points. At which point you have resistance, which is selling. Big traders, some traders have $500 million account, $1 billion account. They say, hey, Apple went up. Let's sell. Call a friend, hey, we're going to sell. And then it comes back down. So you have resistance on top and support. So you have, in between the resistance and support, you have a channel where the stock moves. And you're going to identify that a little bit when you get in, so you know when you're going to get out. Okay? 2 things are going to happen. 1, stock's going to go down below the support that you wanted. And then that's when you're going to sell. Take a loss. Or 2, it's going to go up towards the resistance. And it's going to be the amount of money you decided that you want to take from the stock. Then you're going to sell and get the money. Okay? It can also go in the middle, in which case it could be like a wash. But the problem with that is you lose the time. You lose your time. So it's not really okay to get a wash. I want to make it so you guys can always make money. I want to teach you to where, understand that a wash is a loss because you lost time. And that's another factor in trading. You can win money, you can lose money, but you can break even. But if you break even, guess what? It's a loss. You know why? Because you have bills. Your rent's going to be due. Your mortgage is going to be due. You want to take your woman out. No matter how the market does, you have to pay that bill. And if you have a wash, that's a loss. You lose the time. So based on that, it's hard to trade. It's hard to invest because there's 3 factors going to happen. You're going to wash. You're going to lose money, you're going to make money. Really only the one is going to be okay for you, for us. But we have 2 that we're fighting. That's why trading is hard. If it was easy, everybody would be doing it. Right. And I wouldn't have to be here teaching it. Right? Okay, so we have Apple, right? So can you pull up a 6-month chart for Apple? I focus on technicals, which is to say that I'm a technical trader teacher. So for me, the technicals are everything. What's a technical? Technicals are the dollar amount of the price of the stock, the volume of the stock, the charts, goes up, goes down, resistance, support, that's a technical.
Right, okay.
I'm a technical guy. I'm going to teach you technicals. Technicals dominate. A trend, stock's going down, that's a trend, technical. Okay? People think that technicals are just random, and those people are treated a different way. The other way is fundamentals. Fundamentals is what product do they sell? Do they sell a product that people like? While I embrace technicals, I don't ignore fundamentals either. Like I wouldn't buy, like what if the company wanted to make 8-track tapes? Remember the 8-track? Mm. Like if somebody said, hey, I have a great idea, we'll make 8-track tapes, dude, it's gonna be awesome. Like, would you buy that stock? Yeah. That kind of had its place, and now it moved to cassettes, it moved to CDs, and now it's like not even a CD. Now it's like digital. So that's a fundamental. What do they sell? What's the fundamental? Where are they located? If they're in Timbuktu, is there anybody around there that's going to buy their product? Fundamental. Are their employees happy? Fundamental. Is the CEO excellent? Or is the CEO an asshole? You know, do they spend too much money on their yachts? That's a fundamental. The fundamental guy goes and kicks the tires. You know, how does the company look? Is it a nice building? You know, do they have a marketing strategy? Fundamentals. For me, don't really need them. You know, as long as they can be selling Bibles or condoms, as long as they have some kind of product or selling some kind of service, then you just go right to the technicals. So I'm going to tell you, just go technicals, because that's going to be the bulk. And this is why. Because if you have a good fundamental, someone has a cure for cancer, Amgen. People need a cure for cancer, right? Oh, it's in the bottle right here. Even if they had a cure for cancer, it doesn't mean that the stock's going to necessarily go up or perform. Fundamentals are questionable at best. Okay? News, interestingly enough, here's a little unorthodox. News is a fundamental. Oh, so-and-so, they had a bad quarter. Oh, CEO, committed suicide, While that's damaging to the stock, it's a fundamental. What I'm going to teach you is that if you follow the technicals, they'll show you these things before they happen. Okay? So, news is questionable at best. Earnings reports, they're unreliable. You have a company, they make the earnings good. Oh, we have good earnings. Stock goes down. Next quarter, oh, they have bad earnings. Stock can go up. So earnings are unreliable.
Yeah, I've seen them. When I watched this, earnings did well, but the stock dropped, and I saw vice versa the other way.
That's right. So let's go technicals. What are technicals? What does a 6-month chart look like? Is it going up? That's a trend. Go with that. Does it have a good volume? Go with that. Does it have a PE? PE is price earnings per share, which means does it make money? Go with that. This is stuff I do for stock selection. Is the company a small company? If it's a small company under $1 billion or under $2 billion, it's going to be volatile. It can come down fast. And when it comes down, there might not be any buyers. You can lose a lot of money. If you buy a $10 stock, Envo, it can come down. You said, hey, let's get Envo. And then, no, let's not get Envo. Let's wait, let me show you. That's a risky. But moving up the trough, $2 billion, $3 billion, $4 billion, then that's a nice sized company. People don't just throw the money at a $4 billion company. Has something substantial. $5 billion, $10 billion. I like to buy between $3 billion and $10 billion. These companies that can grow. That's a technical. I'll tell you about that stock selection.
Can I ask questions as you're going through?
Yeah, go ahead.
Just like, not full detail, but like when you mentioned volume.